updates. All right. Good morning. Good morning. Yes, nice to see everybody. All right, fantastic. Let me see. All right, give me 1 second here. I'm just going to go to the channel, make sure this is coming through. There we go. We're good. There we go. All right, let's get into the risk disclaimer, get right into the charts. Busy week ahead. We understand this risk in trading. Please and always use trade capital only. Do not trade with money you can't afford to lose. Whether you're trading stocks, options, futures, forex, cryptocurrencies, you know the deal. All right. Andrew, good morning. Gary, good morning. Wayne, good morning. Happy Monday. Officially the first week of trading, full week of trading in the month of March. We know that we have all eyes on the Fed coming up to the 16th FOMC rate decision. Let's take a look at the old Fed watch tool and see what the markets are saying. It's been back and forth the last 3-4 weeks. Probability is we're having the 25 to 50 base, or actually the 25 basis points hike. That's a 96% probability right now, according to the CME. And interesting, again, they switched it back to have this really small sliver of a probability at 4.1% with no rate hike. Excuse me. With no rate hike. More than likely, again, the Fed is going to raise rates in March. The market knows that we brace for it. What we're trying to actually navigate more so than anything else is Russia-Ukraine. Energy. Crazy week last week. If you have been in the stocks CLF, Cleveland Cliffs with me, or X, or some of the energy plays, Halliburton, CTRA, Baker Hughes, Katera Energy, I think that's CTRA. What else? SLB, Schlumberger. Some of these energy plays, we picked up some commodity plays, DBC, DBB as well. They are just ripping to the upside, and that's a good thing. I took some big profits last week on X and CLF. I'm looking to get back in. I think those stocks still have room to run. That's not, I mean, X is a steel company. CLF is a steel company, but it's U.S. steel. And with Russia, Ukraine, a lot of those raw materials are out of the market right now. U.S. steel is doing really well. So it's been a big jump. I'll show you in a second. So that's the Fed Watch tool coming out on the 16th again. Will they, won't they? Yes, they probably will. How much? 25 basis points. We've had a lot of free mileage out of the Fed the last month or so. And there's been a lot of uncertainty around what the Fed's going to do, but I think it's pretty clear at least one rate hike, 25 basis points, and from there we'll see what the Fed says with their statement and press conference. So let's take a look at CLF and X really quickly. These are steel stocks that have been ripping to the upside. We had this nice bottom that we were buying, and from around $16 lows to current highs, it's up 63%. No big deal. How about United States Steel? This one's actually doing even better. We had a weekly candle that closed above these recent highs at 30 bucks, and I lost the stock last week, or I closed the stock rather around $31, and I'm still getting back in to stay bullish. So that's another rip to the upside. It is up around 70%. So I'm still bullish on both of these stocks. I am taking some profit. I feel like it would be silly to not take profit just in case. Here's my tool. Just in case we have a bit of a break, right? I mean, if this thing just rips to the upside and just keeps going, well, I'm going to keep participating. But if we have a little hesitation right here and any type of pullbacks, I'm very interested, of course, buying the dips. Okay, but that is CLF and X, and some of the energy plays continue to be looking very good. All right, morning, Linda. How are you? Good morning, Jason. Nice to see everybody. Morning, Dennis. So a couple good stocks there. The SPY. Take a look pre-market. We're at 431.39, down about 80 cents pre-market. The DIA down about $1.05 actually. The Qs down just shy of, what is that, 50 cents? Give me 1 second. I know you can see me. Hi. Down around 50 cents, 60 cents or so on the Qs. Volatility index, did we break any highs from last week? Chart alarms on the highs. So recent highs go back to January, and we had our 2 weeks ago Thursday high with that first invasion of Ukraine, 37.88 on the VIX or the volatility index, and still setting chart alarms there. Volatility is creeping up. You can see lows, higher lows, higher lows, higher lows. Now what's going to be interesting is this a steady increase in volatility? It certainly can be. And if we have a steady increase in volatility to the upside, we will probably have a steady decrease in stock price and index price to the downside. So again, conflict wages on, and the market is trying to just hang on to the base and hang on to the foundation and not lose too much ground. But you can see that over the last 3-4 weeks, that has been difficult. Take a look at the weekly candles. We have been in a steady decline for the most part since the start of the year. We have our first or second traded week in January, red, more red, more red. We have tapped the lows a few times. This will be an interesting week. Do we take out any lows, or do we find some footing inside this area? Do we possibly come back up and take out any recent highs? Not sure. To be determined. But it doesn't look like anything is really changing the current situation in Russia, Ukraine. Kiev is still vulnerable, and there's still attacks and everything going on. I was traveling last week, and I just caught some of the mainstream media outlets and news. I'm not really following this too closely, simply because it's all you're going to see. And I don't know how bearish overall I'm going to be because of it. I just think that the market is double bearish sentiment is kicking in simply because we know that there's inflation. We know that the Fed is looking to raise rates along with other central banks, and this certainly isn't helping with the uh, the optimism out there in the world. So I do have a busy week ahead. I took a look at the expiration this morning for my equities on demand trading room this week, and we don't have any 311 expirations. However, we have lots of expirations from last Friday. And so today's session at 10 o'clock, we're going to kick things off with reviewing a lot of those covered calls and start to reissue them. I'm still looking at some repairs. I did lose a couple of stocks last week for profit. CTRA, I lost GD for profit. I'm hoping that we can get a repair running on KHC. I lost PARA, which was Viacom. So if anybody follows my newsletter, that is pulverport.com. If you follow my newsletter, free top weekly picks, could be a Forex pair, could be a stock or option, could be a crypto. All you have to do is go to pulverport.com, click on the weekly newsletter button, and my weekly picks will come to you via email. So let me open up my top weekly picks here, my tracking doc. And I'm losing PARA, $34. CLF 26 or higher. It hit 26 last week. That was a nice little profit. So that was an easy credit spread there. So that's a win. So that's going to be closed. And that's a win. Copy this. And $26 target hit. See if I can turn that green. There we go. All right, so $26 target hit. CPB $49.50 at $50. Let's see what Campbell's soup is at right now. CPB. Sitting at $45.55. So trying to take Campbell's soup up a little bit higher towards $50. Pretty easy one to repair. I'm just going to make a list, and we'll start looking at some cryptos, oil, gold, silver, all those crazy running commodities. And I'm going to list here of expirations. So expirations that I'm going to be looking at again this week. Chewy. I'll put this all in caps. So Chewy, I like the stock. I'm going to own it. CPB, IP, KHC, PARA was Viacom. I lost that stock at $34, so that's a profit. PLTR should be another one to repair. That's Palantir. SLB, like the energy play there. SoFi, we'll talk about that one a lot this week. SoFi is off the lows around $9 up to like 11 or $12, and I'm still looking at SoFi as a pretty good longer-term play, medium-term play. I think SoFi can be a stock that runs from current price $10, $11 up to 20 plus. SVXY. If the volatility index starts to dip, SVXY starts to go up. So it's an inverse play. Another one that I'm in is VIXM. That's kind of my two primary stocks for playing volatility. What else? We have Twitter. Looking at repairs on Twitter, Under Armour, and Uber. Coinbase, CTRA, Triple D, Facebook, GD I lost for profit. That was like quite a bit. That was like almost $100 a share. That's been a longer term hold, so pretty happy with that one, losing it at 230. And then OKTA. So this is going to be the list of stocks that I will be adding additional repairs or lowering cost basis or looking to, hold. Like Chewy. I'm not looking to necessarily repair Chewy. I don't want to limit my profits. Uber. If anybody has been checking out the Showtime series, super pumped. very interesting story about the startup of Uber, and I mean, it used to be Uber Cab, and then they switched gears. They're dealing with all the regulation and like the public transportation sectors in San Francisco and taking city by city. So I'm sure a lot of it's sensationalized and glamorized for TV purposes, but still, it's a crazy story, and it does get me super pumped of owning Uber. I mean, I think. Look, I will say this for years. I mean, probably since 2015, 16, since using Uber, it's the only rideshare service that I use. So, I mean, airport last week, multiple times. Uh, it works. I just don't know, why is the stock price down? Is it really tech related? Are they struggling to grow? Maybe with rising rates, right? Maybe. But anyway, it does make me happy that I own the stock. Okay. Anyway, so we're going to take a look at some 311 expirations, maybe repair some of these out the next couple of weeks, depending on the premiums. We'll talk about that more in class for today's Equities on Demand. Let's get into oil, gold, silver. We'll start out with the dollar index, which again still is a bit of a nagging, plaguing. The dollar's getting stronger. This is now 3 weeks in a row. Take a look at your daily chart. Is the dollar on the cusp of a breakout? Right ahead of the Fed meeting, will we see the dollar officially break out above these highs? Okay, maybe. This is what we'll be watching this week. So I'm going to set a chart alarm. I'll be looking for at least a daily close. Okay, at least a daily close. So 12,303 daily close above. And that way, with the chart alarm going off, I just have to check end of day and see if it does, in fact, close higher. If it does, as we head into the FOMC, not this week, but next week, is this the dollar strengthening that will continue? Right? Or has the market priced in that 25 basis points hike and this resistance holds and the dollar still stays channel bound? I don't know. Right? This is what we've been talking about for now almost 2 months in the flex trading room, talking about equities on demand. I mean, we're trying to make some major decisions here revolving around the dollar, and it really could be a trade that falls back to this yearly pivot for a fourth wave move, or we have this continuation for a fifth wave move because this sideways action is the fourth wave move, and that fifth wave pushes up to multi-year highs. So to be determined, and I am not putting a ton of trades in ahead of that, but it's all good. So we have to watch these levels carefully. That's dollar index. Oil, chart went off last night at 116. Holy shnikes, I didn't see that. 127. Great googly moogly. Wow. So we got some crazy big spikes up there towards 128. And we have rejected off that. So oil is still up 1.68 on the day. But wow, what a retreat from this high. And I'm going to check. Let me see some other instruments. Let's look at like USO. Let's look at some Brent crude. So USO is at 79.46. Pre-market's 80.15. Man, what a freaking run that was, huh? Did anybody buy USO during COVID's crash in 2020? That was a nice little $20 breakout. Now it's a 4x return on oil. Man, I mean, you had to hold it for a while, obviously. 2020, I mean, that's now literally 2 years ago. But a little 400x or a 400% return didn't hurt anybody. We've got Brent crude. Let's see if I can find the instrument here. So Brent crude oil. Straight up on Brent. That's not the instrument I was looking for. So Brent crude oil, UK oil. Take a look at this. Yep. So very similar look as a U.S. oil. So today's high, much higher. This is UK oil running up to 137. We've had some interesting plays on Forex or in Forex the last couple of weeks. This is last Friday. Okay. So a lot of volatility, risk on as far as commodities. I take that back. I would say commodities just continue to crush it. So Aussie doing well, New Zealand doing well, but the JPY strong last week with some risk-off flows. The dollar and the Swiss, interestingly enough, were safe havens, but both baseline last Friday. We have the CAD getting softer with maybe some peaking. The BOC did raise rates last week to 0.5. The pound, one of the weakest. So, I mean, look, the Eurozone's getting hit pretty hard. Euro has been by far the weakest currency. I looked last night on my phone, saw those crazy, crazy moves on Euro Aussie, Euro New Zealand, Pound Aussie, Pound New Zealand. They have essentially looked like this. They were straight up, and they have fallen straight down, and they continue to drop. Look, we took a lot of good profits. I mean, pound, Aussie, pound New Zealand, I did not run certainly as long as I wish we would have, or just implementing trailing stop losses would have been a massive trade for us on those pairs. But interesting, right? Like just seeing Aussie strength and New Zealand strength is pretty impressive. Commodities in general doing really, really well. And I don't think it's time to, pick tops and bottoms. I said in using, using U.S. oil, if we want to find a decent top in U.S. oil, then we should probably look for a bottom on something like the Eurocad. Okay, Eurocad is down at 39. We have a nice spike low here at 37.80. We have a nice pocket to trade back to around 4,100. Now, does this mean I'm comfortable just buying the Eurocad right now? Not necessarily. Okay, but with a 2 pivot cluster there, we have the weekly and another weekly plus a monthly plus past support around 41. I'm going to look to see if this can bleed a little bit lower. Let's go further left on this chart. We're back down to these lows in 2016. We spiked down to those levels. Now we also have these lows, which run pretty hot around 3,100. So where I'm looking to get involved, and again, this is if you're interested in trying to get some lows. I mean, that's a really strong level of support that we did hit. So if you're buying those lows, which we have a 3,800 level bought in the Flex trading room, 3,800, 3,850, that is filled. That's currently in profit. The next level would be down here. So all I'm looking is kind of safely, small trade sizes, but safely looking at accumulating some lows on the Eurocad and looking for a bit of a top to form on oil. Okay. All right, let me grab some comments here. Inflation in 3 years could hit 15,000 an ounce. Gold detector and hit the gold fields. All right. Why is the CAD down on the CSI chart? So that's last week. So take a look at today. Right, so we had commodities again kicking off right where the market left off last week. Aussie strength, New Zealand strength, CAD was doing pretty well. Look, you're not going to get that real-time correlation, right? I mean, again, you can see that CAD does correlate with oil, but oil was up super aggressively and then rejecting off that level, and the CAD just kind of floated, and it's retreating. So it's not like it's 100% correlated, right? So I mean, the CAD has been strong. The CAD is still a commodity-based currency. But I think what's going to be interesting this week as we head into the one final week before the Fed rate decision, which all eyes on the Fed, which is super annoying, but that's what's going to happen. What I'm interested in right now is we have some decent recovery on the euro, right? Euro, again, was one of the weakest currencies to start off this week's trading, and the euro is recovering. Okay, the Swiss, what was working lower, has made its way to be one of the weakest currency pairs. That is great. I did close some profit this morning. I updated this inside my Telegram channel for the Flex Trading Room. I did close some profits out on the Aussie Swiss, New Zealand Swiss. Overall net profit positions on both. They were levels that we were looking at. So here's the Aussie Swiss. I was looking at basically around 6,800 to 6,900 in this window. Okay, right in here. I thought that if this Aussie Swiss could get back into this high, get back into this monthly pivot, that I was looking to protect some profit. And this morning, maybe it's because I don't sleep hardly at all during the work week, but I was up here around 68.30, 68.40, closing out for some profit. So what I'm going to look for now on Aussie Swiss is if we have, wave 1, wave 2, wave 3, if we have a pullback, look for this previous resistance to become support, and then look for another run on the Aussie Swiss to the upside to take out this recent high. One thing I like about this trade as well is we are on the right-hand side of this channel. Right? So if we end up challenging this high, perhaps we're putting in more of a longer term head and shoulders, and we start to see this commodity play still be like one of the major themes for 2022's trading year, right? Trade commodities, trade energy, trade the sectors that are making money, trade this growth to value transition. And that's where I think that, traders have the opportunity to be very profitable this year. But it does take some portfolio maneuvering to get it. Okay. Let's see here. Daniel, what's that weekly chart on Bitcoin could be forming a higher low? That's possible. I did take a little taste of Bitcoin and Ethereum this weekend off these recent lows. We'll see. One thing that I'm a little skeptical of, we talked about this last week in Flex, something like this, if it's just a little bit of a correction, okay, after this kind of downward move, this could be high to low. This could be correction, right? So high to low swing, we could be correcting here. And we have one more push to the downside coming before I would say we're putting in more of a low. So again, I'm not super optimistic that these lows are like 100%, right? I think that we could test, we could possibly break. And, that would be obviously like depressing for anyone that's like pro Bitcoin maximalist and not willing to hang on to any type of downward move. I'm not saying that 35,000 is the bottom, right? I mean, think about it. If we have high to low and we have a flush lower, here's what I look at. Do we flush lower on the backside of this trend line? So this is left side, this is right side. If we flush lower, then I look at oversold conditions, pivots galore, then we put in a bottom, and then we have this thing going back up towards 70K. The one thing I think we have to get through right now is we have to get through, and even if it's just the timeline, we have to be able to survive the next week, the next week, the next week. We have to survive however long this Russia-Ukraine conflict takes, right? I mean, Europe is looking at taking steps to get more energy independent. U.S. same thing. That does not happen overnight. So sanctions, hitting Russia hard. The Russian exchange or the Moscow exchange getting crushed, the ruble getting crushed. We know that, but Europe is still heavily dependent on Russian oil, and those exports have not really ceased. So, again, I mean, we can take all the action we want, but if Europe is still buying from Russia heavily, I mean, that's a risk. So, all I'm saying is we have to navigate that time, and maybe it takes another 2, 3, 4 weeks, right? Maybe it goes on for months, and that's just going to continue to create a little bit of uncertainty in the markets, and we have to figure out how to navigate that. But I will say this: don't let the geopolitical tensions cloud your judgment on the charts. Look at the charts, look at the big levels, keep the risk. I'm saying smaller because I want that dry powder. Like this morning, closing up trades on Aussie Swiss and New Zealand Swiss, that actually opened up a lot of good margin for me. So I was up to this area here on New Zealand Swiss. We had a 63.79 high. I told traders it's on our workspace charts for smart trader, right? Anything between 6350 and 6400, 6390, that was the pocket that we went back to trade to. And guess what we had? We had a nice little pivot cluster right here. Weekly, monthly, yearly. And our wick was just off of that. To me, that is good enough. Now, if we have this level, check this out. Low to lower low, but now that we've broken the structure, I think we have a crown pattern. Let's look for a buy the dip crown and see if this New Zealand Swiss can rally up one more time. Right, let's put in a low right here off of this yearly pivot, off the structure. And if we get some dips back to around 6,300, 6,250, 6,200, I think that structure looks fantastic. Nice little rally, pull back here, find a higher low, look at this left structure to this right structure, and then we plan on this symmetry move that gets us maybe up to 6,600. So again, big trades possible, but I wanted to protect what I had right here. We can always look to get back in. But that is what we're doing to take advantage of some of these commodity plays in currencies. Okay. All right. Cheryl says Germany said they'll continue to buy oil from Russia. I mean, they have to, right? I mean, that's the downside. They can't just turn it off and say we're going full hydro, we're going full solar. That infrastructure takes tons of time to put in place. And if you remember in Flex, you remember in Equities on Demand, we've talked about this potential energy crisis is a very real threat because now it's like it is so glaringly obvious that we can't be energy dependent or we can't be oil dependent, certainly when it comes to Russia for right now. So rather than putting on sanctions, cutting off Russia oil, that's why it's kind of a weird situation where Russian oil still very much makes its way throughout the world, and I think they're the 5th largest producer right now, something like that, or maybe like top 3. I'm not sure. I know U.S. is number 1, but we're also one of the largest consumers. So we import tons of oil as addition to exporting. But I mean, we're talking about 2030, 2040, 2050, carbon emissions, green talks and ESG and all that stuff. But right now, like the here and now, all that stuff goes out the window. This is like, how do we survive the short term and then worry about the long term later? And that's why the market is still just slowly dripping lower, and we're seeing a lot of uncertainty and higher upticks in volatility. Speaking of volatility, really quickly, and if you have any requests in currencies or stocks, let me know. The VIXM, VIXM. This is a 318 expiration. I like this trade a lot. I own the shares at 30.70. I did a covered call for $1, which brings my break even down to 29.70. And I could potentially lose the stock here at $34, which I'm totally fine with. I will say this. If this thing comes back down, that means that the volatility gauge drops as well. That means my SVXY goes up. So I am partially hedged between the VIXM, looking for this to hopefully lose the stock above $34 if volatility goes up. My VIXY will be pretty good. My SVXY, I'm going to have to hang on to a little bit longer. I think this dipped down to like $51 last week. So SVXY, we're trading at $48.81. I'm looking at doing another repair here out to 55 or 56 bucks. I've drilled the cost down to like 52 now, if I'm not mistaken. Let me check the SVXY really quickly on my spreadsheet. So SVXY is over here. SGXY. There we go. So a $56 covered call that expired last Friday. That brings my cost down to $52.92. So I can repair this anything above $53. My plan is to get a $55, $56 covered call. Maybe go out a couple of weeks. We'll see what the premiums look like on this. But if I can get filled today for an expiration out to this Friday, next Friday, repair it at 55, 56 bucks, and try to make $300-400 on this trade if I lose the stock. But I'll keep drilling it down. Right. So definitely playing some volatility. Playing some indices, DBB and DBC. Look at this. These are just crazy good runs. We're in credit spreads in this with EOD. This is just commodity plays. Of course, I could be in more profit if I just bought the shares. But just in case it got a little bit crazy and volatile and we had some dips. But, man, these things are just running hot. DBC straight up. So these are just nice diversified ways to play commodities in general. I'm playing metals. I'm playing, agriculture stuff like soybeans, wheat. But anyway, it's working well. I just wish I owned the shares. That would be a lot more profitable. I don't necessarily love buying highs, and we're just buying breakouts right now. Okay, let's take a look at some other currencies. So our strength right now, we have the euro making a nice recovery. Let's take a look at some of those euro pairs. So euro Swiss. Hopefully, we are looking to put in, and again, take a look at the technicals on this chart. If this is left side of the trend line, right side of the trend line, and we're just shy of this yearly pivot, this could be one of my favorite trades for the entire year in Forex because I've been slowly, you see all these black lines. This was shared in my Pulver Report newsletter. I told traders, look, I'm going to invest in the Euro Swiss. Okay, I'm going to treat this whole area like an investment. I'm going to buy these levels, buy them small. I'm going to look for some type of play like this. When this low is in, I'm pretty confident that whether it's now or slightly lower, when this low is in, this currency pair is going to be coming back up here and back up here towards 10900 or 110 or 111. Now, this means that we have to have a pretty substantial recovery from parity 1.00 back up to 106. Totally fine with that. I've been leveling myself in. My break even's around 102 and change. We take it back to 106, take some profit. We get a pullback here, buy some more, take it up from their leg, wave 1 and wave 3. So this is what we're watching for. I understand that, we may have a bit of a flash crash still, which hasn't happened yet, but it's possible. So I'm still remaining small. I haven't added anything crazy big to the trade size or anything. But looking left on the higher time frames, we have the Swiss National Bank flash crash back in 2015 with a low around 96.50. So I'm going to set a chart alarm there. That's the 2015 flash crash low right there. So I'll see if that low gets tested. If it does, I'm still buying it. But hopefully on the right side of this trend line, this is where the market can put in some lows. I also should see some divergence. Look at that on the daily chart. We are oversold. We're oversold. Let's look at the weekly chart. If we have divergence, we should be able to connect the lows right here. So lows in momentum, lows in price, back down to oversold conditions on the weekly chart with a very obvious weekly pocket. So not only do we have the yearly pivot right here, or I'm sorry, the yearly pivot right here around 106.20, but we have this massive pocket around 102.90. Now, like I said, I'm not interested in taking this trade back to 102.90 and stopping. I'm interested in taking this trade all the way up here to this yearly pivot, putting in an official bottom and low on the Euro Swiss, and taking this trade up for a big ride, hold this thing for the next 3, 6, 12 months, whatever it takes, and try to turn this into a monster profit. So with the recovery on the euro, it's looking pretty good. Euro dollars back above 109 or so. We're trading at 109.22. We had this support right around 108. What was this low from this morning? So we had lows around 108.08. And if I'm not mistaken, I think I got filled around 108.15 on that euro dollar. Let me get into my MetaTrader 4 and figure out if I got filled on that or not. All right. Let's see. Dano says euro dollar looks to be breaking out a little on the 1 hour candles anyway. Yeah, and look, it could be just a recovery week. I mean, as we head into FOMC next week, we could see the markets, kind of balancing out, right? We had this aggressive week, and the euro dollar could come back and balance to around 111.25. That still does put a little bit of the momentum is still very much on the downside. I mean, for me to turn around and say I'm bullish on the euro US dollar, we really have to put in a low, recover all the way back up here to 1500, and then we see if it's pullback and another push coming. We still have weekly harmonic patterns that are back to 1650 and 1700, but we really need to look for a noticeable price pattern bottom, and I just don't have that yet. I would be anticipating and guessing but that's the thing is I'm not going to guess. Okay, I'm not going to guess at these bottoms. All right, so let me check when I get logged in here. Okay, so we're good on Aussie Swiss, good on New Zealand Swiss. Let me go to Euro Dollar. And I did get a buy. Yep, I scooped up a buy trade at 108.20. So I have 108.20 and a trade at 109.05. So I do have some decent lows in that pulls my break even down to like 1.14. And, again, remaining patient because if there's a recovery back to 115, I can always take some profit. We love that level around 117 if we get it. So we will be watching. Let's see here. Okay, so that's Euro Dollar. How's the Euro recovering against other things? Euro Aussie, again, putting in some pretty solid lows. Look at just the size of these weekly candles, these pockets. Again, if anybody's interested, flex trading, we talk about pockets. We trade to them all the time. It's great price action trading. And this just, to me, this is all about like Euro recovery. Volatility right here. We have a level of support. We have this pocket level. Even if you take a swing from high to low, just grab a Fibonacci. You're going to see some pretty easy recoveries on some of these pairs. Eurocad, I didn't get that buy trade filled, although it did hit. I've got a 618 extension. Man, I'm very tempted to possibly get. What's up with my time frames here? No connection. Come on, MT4. There we go. I got to get logged in MT4. Anyway, Eurocad, I kind of like looking for a short-term buy opportunity if we can get it, but I'll be watching that today. I'm not sure why my MT4 is being a turd. All right, so I'm going to try to log back into that. Maybe I have to use a web platform. But it looks like this. I mean, some of these massive candles, take a Fibonacci, go from a previous high right here, and drag a swing from high to low. Even in the short-term corrections, and again, I'm not saying the bullishness is really sustainable on the euro, but even from this low being formed, recovery back to the 23%, recovery back to the 30%, recovery back to the 38%. All those levels are likely going to get hit. It's just the market's way of finding some type of balance, right? Some type of equilibrium after just a monster sell-off. I mean, look at this weekly chart. For the last 4 weeks, 1, 2, 3, 4 weeks in a row, crazy how bearish that was. I mean, that was way faster, way further than I expected. That was a 16, almost 1,700 pip move in 4 straight weeks. Wow. You take a look at the pound New Zealand, same thing. We're down to 9,200 with lows here around 9,000. We started trading the pound New Zealand at 205. I mean, I was happy with this thing dropping, 500 pips for us, let alone nearly 1,700 pips from that high to low, almost 1,500 pips. Crazy stuff, right? All right. So we've had some great calls on the direction. Just in the event of these really strong commodity pushes, trailing stop loss would be great. I like the fact we're opening up some volatility. The Fed is coming around next week, which again I think the volatility continues to stay elevated. So continue to trade, continue to get some dry powder, continue to see some margins working. I am trying to get there we go. There's my charts finally up and running. Eurocad. Okay, so let me take a look at the daily chart. If I have some pockets, I'm pretty interested in maybe putting in a buy on the Eurocad, maybe coming back in to retest those lows. And my pending order is 34.20 on the Eurocad. I did have a buy in at 38. It was 38.50, and that was filled. So we did get filled at 38.50 on that Eurocad. So that's good. I just want to confirm that. So 38.50 was filled on the Eurocad, which is not a bad spot considering the low is 37.60. We buy at 38.50. We're currently up about 60 pips. And if we're holding this trade right in here, I would say we can take this back with some confidence back to 4,100. And it may be more than that, right? We might sneak back up here and start to creep into previous highs. But if in case oil doesn't officially put in that top, don't hold this very long if you don't have to. If you took a low risk trade at 38.50, it goes back to 4,000, goes back to 4,100. Take your 150 to 200 pips and call it a day and go find another trade. So I'm just trying to pick some really good levels to trade, and if we get paid without a lot of risk, let's get paid without a lot of risk, right? All right. Swiss franc, I'm liking the weakness. Hopefully it's coming around and sticking. The Swiss yen, looking to see we're trading at 124.68. Still have a lot of indecision on the Swiss yen, but hopefully this will be officially dropping to the early pivot, to the pockets, back down to this low on the right-hand side of the trend line. Let's go Swiss, meaning Swiss weakness. And elsewhere, I'm still long dollar Swiss, still long euro Swiss. And we've been in those trades for a while. Nice bullish candle today in this week to start things off. Is that just today? If that's just today on the, wow, all right. I like this dollar Swiss. Now we're talking. So dollar Swiss is pushing back into profit between some of my flex trading room trades and elite trading room and robots and everything else. All we've been doing is buying dips at like 91.50. Just buy dips. And hopefully this thing is going to head up to 93.50. Sorry, I'm like ducking out of the way. I'm just looking at my screen. Hopefully it goes up to 93.50 and then we start to see a breakout above. If we break above 93.50, I am taking this thing for a ride to 96 and change. And as we head into FOMC next week, maybe this is ready for an official breakout. So if we can buy low, get up to 93.50, maybe the dollar gets pushed into new territory, break these highs. Look, this is a pretty simple measurement. If all I did is measure this right here, take a look. If all I did was measure this indecision, okay, so we have that boxed trading. Let's copy this and stack it to the upside. If we break above this 93.50 area, just based on a projected breakout, that takes us up to 95.75. We've already projected symmetry here based on Fibonacci's to 96.84. We take it up to symmetry, that takes us up to around 9600. So again, a big break right now as I'm accumulating off these support levels. 93.50 is kind of target one if I want to just get out and protect some profit. But if we can hold it through that breakout, this thing should have all of the abilities to get up to 9600. And I remain patient, but you know what? Hopefully the patience pays off. Okay. All right, sounds good. So any other currencies you'd like me to take a look at? I was interested maybe discussing in this week's Flex Room about some exotic pairs. The peso's been ripping to the upside. The krone has been, very volatile, but off of these higher lows, you're seeing some opportunities to buy some dips and get some risk-off trading. The dollar Sing has been ripping as well. The dollar Turkish lira is back up off of these, crazy, literally 80,000 pip swings. We are now from about it's what is that, 6,000 pips to the upside on the dollar Turkish lira. South African rand is pretty choppy actually, which is surprising. But a lot of this has to do, I think the South African rand correlates strongly with gold, and gold and silver have been doing very well. I had a chart alarm go off on gold last night, up above $1,900. So we're at 1976. We did hit our head and shoulders projection. So we had our low to high, higher low to higher high, higher low to higher high. We projected that break of the 1835 neckline, and you can see that we formed a bit of a top today to complete that head and shoulders. Now, that doesn't mean that this is done. I think that the reason we look at these big price patterns is because this is where the pattern is forming. So look left. Gold still has room to run to 2,000 plus, but that just means we're looking for dips to buy or flags to buy. I like bullish on gold. I like bullish on silver. I think they look awesome. Okay. Yep, we'll take a look at that in a second. Let's look at silver. Silver is 25.49, a little bit of a breather today, but SLV still doing really well. And one of my bigger positions, I have like almost 5,000 shares on SLV, and it is, my base is like 21 bucks. So I'm up a few $1,000s on SLV, but I'm trying to hold this thing all the way to $26, $27 to correlate with that move in silver. The Russian ruble, yes, the dollar Russian ruble. Take a look at this. Another crazy big bullish day. This is pretty scary if you ask me. I can't trade the Russian ruble. I lost those privileges back in like 2013, 14 when oil crisis was happening. We saw a big rising wedge and oil was just plummeting in free fall. A lot of U.S. brokers started to delist the Russian ruble as a tradable instrument. It's always been illiquid. I traded it quite a bit for positive rollover. It was also a great pivot currency. But this type of move here is like, the technicals kind of break a little bit when this is in, that's a 67,000 pip move in the last, 3 weeks? And you look at that from a percentage standpoint, you can turn this around. How much value has the Russian ruble lost against the dollar? So go ruble versus dollar, and you will see exactly what I mean. Okay, this has lost around 50% of its value over the last 3 weeks. You look at the MOEX, the Moscow exchange. The MOEX hasn't even opened, right? This hasn't been open since February 28th or March 1st. We're like 2 weeks removed. This thing has not opened. So if and when it does, I can't imagine it's going to open anywhere near where it closed. Okay, so again, I mean, we're talking about highs to lows. That is a 62% decline, which is obviously accelerated, but the MOEX is going to get hit even harder, where this thing could be, 80, 90% from where we had these recent highs back in late, fall of last year, which is insane. So that is why there's a crazy scramble to, ask like, oh, don't let anybody, don't let Russians go into cryptos. It's like, I mean, oligarchs and some of the influencers, I suppose, yes, like that's who we're trying to target with sanctions and everything else. But for your average Russian citizen that's just trying to get out of the country, it can't be easy. I certainly don't envy this situation or this position. And I mean, put yourself in that particular person's shoes. If you're trying to get out of the country and you have money invested in the stock market that you can't access, you have money in the banks that you can't access. I mean, that's a paralyzing situation, right? So anyway, with the MOEX, I don't know when it's going to open, and when it does, I don't know how far further down it's going to be. I mean, we could be gapping crazy low. I did read an interesting article from Ray Dalio last week. He was sharing, back during like World War I, World War II, those exchanges with Japan, Great Britain, Soviet Union. I mean, they had massive gaps to the downside. Like World War II, when it was Japan and Germany, when they gapped lower, they lost like 50% just in the gap lower. And then the UK and the US and the Allies were rallying as they, kind of gained power. So that's all like changing world order stuff with Ray Dalio if you read his book. But interesting stuff, right? Strider says basically the ruble's now the new dinar. Sure. No, I mean it's just it just sucks. I mean, you feel for the citizens that don't want this. You feel for the citizens that are just trying to move, get out, get out of harm's way. It can't be easy. And like I said, I I feel bad. I don't know what this looks like. I think this, if you put the situation and you put yourself in the situation, what would you do with your money if it was U.S. based? I mean, I think it's like there'd be pretty big problems if the U.S. has this type of drop or close or gaps. That's essentially like financial Armageddon, run on everything. That's like doomsday stuff, right? That's financial Armageddon. That's the worst case scenario. Just saying, is there a way to avoid it? I mean, right now, my only solution would be having something like a decentralized currency in crypto. That's it. Like that is like the alternative. And that's what makes cryptos very exciting and very, trying to be optimistic for it because it is genderless, borderless, religionless, right? Decentralized. Nobody controls it. That's a good thing. But until we start to see the price behave in a way that's like everyone is on board and it is widely accepted, we still have to wait, right? And we're speculating. We're hoping like, hey, Bitcoin hopefully doesn't break lower than $30,000 or $25,000 or $20,000. But if it does, we have to be prepared for that. All right, and you can see here chart alarms are set above and below just to keep tabs on things. If this is going to be a double bottom, I'm projecting highs back up towards 58. That double bottom also could be a major price pattern off the lows where if we hit that level, extend it again, and just put it up top where we get to 70,000. It's possible, but we're going to have to see some real growth and runs out of cryptos and a recovery in the markets in general. It's still a risk on related instrument. And so if we're looking at all the major indices down, like Wall Street's officially open now, we're down in the day for the SPY. We are down in the DIA. Once it switches over here, I'll wrap up in just a few minutes. DIA is down for the day. Q is down for the day. The VIX is up 5%. So we had a gap higher in the VIX. It's starting to fade back in, which is interesting. Take a look at SVXY as well. SVXY at 48.23. We're starting to bleed down to these other lows. I'm looking to possibly buy some more SVXY as a bit of a hedge. I'm prepared to take SVXY a little bit lower. If I bought some more at around 48.23, I probably say this like 48.23, then again at like $40, then again over here around $30. Position 1, position 2, position 3, level in, and then once we see a little bit of a breather on volatility, like this was the COVID crash you can see that it took time, but this market does want to head up higher. So as volatility decreases a little bit, we start to see the SVXY stay pretty bullish. So this could be a bit of a correction as the SVXY goes lower. Okay, that means that our volatility gauge, like the VIX, goes a little bit higher with higher lows and higher highs. Sorry, my paper is getting in the way. Higher lows and higher highs on the volatility. So a couple ways to play that hedge. All right. Okay, so like I said, I'll start wrapping things up here. If there are no additional requests, we covered a lot. Pound US dollar. Yeah, Susan, I didn't necessarily do pound US dollar, but we took profit on it. I was looking at 3,200. We're trading at 31.59. So we sold the pound US dollar right in here. We sold it on this breakout. We sold it on this pullback, and we took some profit at this pocket around 3,200. So that was my target. My robot as well. It hit 3,200. I turned the robot off at that price. So that is a great trade from selling this resistance, and it held nicely, broke out of that little choppy consolidation, and went down to our target to find channel support. So that trade for me is done. If you're short on pound US dollar, move a stop loss, get that risk eliminated, and trap some profits. And I'd say mission accomplished on that trade. Okay, good stuff, good stuff. All right, if no other questions, no other instruments for me to take a look at, we'll wrap things up. We will be back on Friday for more Pulver Report, and let's have a good week. Equities on demand students, flex students, I'll see you this week in the trading rooms. No disruptions, business as usual, and let's have a good week. Okay, let me see something really quickly here. If it updated my closes for this morning. Yep, so I closed out for 400 pips between the Aussie, Swiss, New Zealand, Swiss, some net profits. Pretty happy with that overall. No complaints. Yay. All right, sounds good. And really quickly, before you duck out, if you would quickly smash that thumbs up button for me to help the algorithm and support the channel, that would be great. I'm gonna think of a video this week. I didn't want to trend hack and be like, oh, the market's crashing and just like that's not my mindset. Like me putting out like red flags and warning signs like, look, we can trade this stuff. Like all the stuff happening with Russia, Ukraine, we can trade this. We're making money in stocks, trading commodities. We're making money in currencies because we have volatility. We're still picking our levels and being patient on cryptos. I mean, there's nothing about what's happening right now that scares me like we shouldn't be trading. Oh my gosh, it's like we should be trading. Volatility is good, right? The worst thing for a trader is having the market do nothing. So the fact the markets are moving, it just depends on how you're positioned. So that's why I see all the videos the last couple weeks, like channels I respect and follow. It's like when they're just the market's dropping, blah blah. It's like enough. We get it, but all I'm saying is we have to navigate the situation. Have the cash at hand, have the margin available, keep taking good trades. But this is absolutely a tradable environment, and those that grind it out are going to be probably better off than those that just stick their head in the sand and hope everything goes away. Okay, so if you smash that thumbs up button for me, I appreciate it. And we'll be back on Friday for more Pulver Report. I will think about a video this week. Maybe I'll just do like another lesson, another keep it serious and simple lesson or a trading 101 video versus diving into like all the Russia Ukraine stuff. There's so much media stuff. Read about it. Fine. Honestly, if you want to read a great book, read Price of Tomorrow by Jeff Booth. Read Ray Dalio's Changing World Order. Changing New World Order. What is it? The Changing World Order by Ray Dalio. Read a book. If you want to see where the historical context comes in. Otherwise, it's just strictly speculation. This week's a full trading week. Next week is FOMC. We're here to trade. Okay? All right, sounds good. Equities on demand students, see you in 10 minutes. Flex students, see you Tuesday, Wednesday, Thursday. And everyone here on this channel, see you back here on Friday, 9 o'clock Eastern time. All right, thanks, bye.